So let's talk about the one thing I've been thinking a lot, the unseen, the benefits of the policies that you can't measure in numbers. What's like one of those things that you would say that you weren't expecting when you started, but it was just like a unintended side effect?
That's a good question. Probably the top one that comes to mind is the disability benefit or the waiver premium. You know, now that comes at a fee. That's not required that you add that. But if you were to add that and then become disabled or be unable to work, part of the benefit is that the insurance company picks up your base premium. Any PUAs that you were expected to pay, they're not covering that, but they're going to cover your base and do so while you're disabled. Given that these are whole life products, the chances of that happening are not high, but that's a coverage or a benefit that doesn't always get discussed or talked about. And I think that's a huge benefit. So the other benefit that comes to mind is the accelerated death benefit. Different companies look at that different ways, right? So it's not all the same through all the companies, but you've got typically your critical illness or some type of a setup where you may be a terminal setup or, maybe a specified, but you end up through that benefit getting access to a portion of your death benefit tax free while you're alive. So if you're in a setup where, you need to go into a care facility or something along those lines, you've got access to funds that you've contributed to over the course of your lifetime. And you don't have to think about where that's going to come from or whether or not you have that benefit available. So I guess those are probably two that come to mind that are, more riders or more setups within the policy structure. Yet I, the one that gets so overlooked and just underappreciated in my opinion is what you have access to in cash value. That's the reason why you're setting up an infinite banking concept style policy is that your goal is to build some cash value that is basically your net present value of a future death benefit. Like that's the whole goal of setting that up. So that in itself that they allow you to leverage your future death benefit payment and then allow you to borrow from that right now, that's the bread and butter.